You check your bank account, see a number that barely covers next week's expenses, and immediately close the app with a heavy sigh. Scrolling through social media right after does not help, as you are bombarded by people your age flashing luxury cars, bragging about massive crypto wins, or talking about real estate empires. It feels like everyone else received a secret manual on how to get rich, while you are just trying to figure out how to afford groceries without going into debt. That overwhelming sense of being left behind is a heavy burden, making the very idea of building wealth feel like an exclusive club you do not have the cover charge to enter. But let us tear down that velvet rope right now, because the biggest lie you have been sold is that you need a massive pile of cash to even begin. You do not need a trust fund, a six-figure salary, or a sudden windfall to start taking control of your financial destiny today. The reality is that the landscape of wealth creation has fundamentally shifted, breaking down the ancient walls that kept average earners locked out of the markets. Your most valuable asset right now is not a huge bank balance, but rather the sheer amount of time stretching out in front of you. The first step is completely redefining what an investor looks like in the modern economy. An investor is no longer just a guy in a tailored suit shouting on a trading floor, moving millions of dollars before lunch. Today, an investor is a college student putting $5 a week into an app while waiting for the bus, or a young professional redirecting their spare change into a digital portfolio. By shifting your identity from someone who merely spends money to someone who actively plants it, you take the crucial first step toward financial independence. Imagine yourself 5 or 10 years down the road, waking up without that familiar knot of financial anxiety in your stomach. Picture having a growing financial safety net that gives you the ultimate luxury in life, which is the freedom to make choices based on what you want, rather than what you are forced to endure. That future version of you is entirely dependent on the incredibly small, seemingly insignificant choices you make with your spare dollar right now. We are living in a golden age of financial accessibility, largely thanks to the explosive rise of micro-investing apps. Platforms like Acorns, Robinhood, Stash, and others were specifically designed to strip away the intimidation factor and the high entry costs of traditional brokerage firms. These digital tools have democratized the stock market, transforming your smartphone from a device that drains your wallet into a powerful engine for wealth generation. Historically, one of the most massive roadblocks for young people was the sheer price tag of individual company shares. If a single share of a major tech giant cost $3,000 and you only had $50 to your name, you were effectively locked out of owning a piece of that success. It created a vicious cycle where only the wealthy could afford to buy the assets that generated more wealth, leaving everyone else stuck on the sidelines. That barrier has been completely obliterated by the introduction of fractional shares. Think of a stock like a massive, expensive pizza that you could never afford to buy whole. Fractional shares allow you to buy just one single slice, or even a tiny bite of a slice, based exactly on the amount of money you have available. If you have $10, you can own $10 worth of that massive tech company, allowing your tiny investment to grow at the exact same percentage rate as the billionaire who bought 10,000 whole shares. This completely changes the game because it means your spare change now has immense power. Let us say you decide to skip one overpriced iced coffee a week and instead funnel that $7 into a micro-investing app. It feels like nothing in the moment, a totally painless sacrifice, but you are actively transforming a fleeting consumer purchase into a permanent, working asset. Many of these platforms even automate this process for you through clever roundup features. When you buy a sandwich for $6.50, the app automatically rounds the purchase up to $7 and invests that spare 50 cents into your portfolio. You are literally building a financial foundation using the digital equivalent of the loose coins you used to lose in the couch cushions. The psychological victory here is absolutely massive and cannot be overstated. When you see your balance grow from $0 to $10 and then to $50, the paralyzing scarcity mindset begins to shatter. You stop viewing yourself as someone who is constantly broke and start seeing yourself as an active participant in your own economic future, which builds an incredible sense of momentum and pride. Once you have those small amounts flowing into the market, you unlock the most powerful force in the financial universe, which is compound interest. This is not just about your money making money, but about your money making money and then that new money making even more money. It is a relentless compounding cycle of growth that accelerates over time, turning tiny, consistent contributions into a formidable financial fortress. If you look at the math over a span of several decades, the results of this compounding effect are nothing short of mind-blowing. A 20-year-old who invests just $20 a week could easily outperform someone who waits until they are 40 and tries to invest hundreds of dollars a week. The sheer length of the runway allows those small, early investments to snowball into massive sums, proving that when you start is infinitely more important than how much you start with. Yet, a dangerous trap many young adults fall into is the illusion of waiting for the perfect moment. You might tell yourself that you will start investing when you get a better job, when you pay off all your debt, or when the economy looks a little less chaotic. But waiting for perfect conditions is a guaranteed way to miss out on years of compounding growth. And the truth is, there will always be a reason to delay. The ultimate strategy to defeat this hesitation is a technique called dollar cost averaging. Instead of trying to guess when the stock market is at its absolute lowest point, you simply commit to investing a set amount of money on a regular schedule, regardless of what the news headlines are screaming. Whether it is $5 every Friday or $20 on the first of the month, you buy automatically, rain or shine. Implementing this strategy completely removes the toxic emotion and the paralyzing stress from your financial life. You no longer have to obsessively check stock charts, panic when prices drop, or feel greedy when prices soar. You simply set your system on autopilot, trusting in the historical resilience of the market and freeing up your mental energy to focus on your actual life, your career, and your passions. Over time, this slow and steady approach consistently beats the erratic behavior of people trying to time the market with large lump sums. When the market is down, your automated $5 buys more fractional shares on sale, and when the market is up, your existing shares grow in value. It is the classic fable of the tortoise and the hare applied directly to your bank account, where relentless consistency always claims the ultimate victory. Of course, the journey will not always be a perfectly smooth upward line, and seeing your portfolio value drop for the first time can be terrifying. Market volatility is a totally normal, unavoidable feature of the global economy, and sudden dips can trigger a deeply ingrained fight-or-flight response. The instinct to pull your money out and run for the hills is incredibly strong when you see red numbers on your screen. But as an empowered investor, you must aggressively reframe how you view those market downturns. Instead of seeing a market drop as a disaster, you need to recognize it as a massive clearance sale on the world's best assets. Because you are using dollar cost averaging, those dips simply mean your regular weekly contribution is suddenly buying more shares at a steep discount, setting you up for even greater gains when the market inevitably recovers. Surviving those temporary drops builds an incredible, unshakable financial resilience within you. You learn to detach your emotional state from the daily fluctuations of the stock market, focusing instead on your long-term horizon. That emotional discipline bleeds into every other area of your life, making you a calmer, more strategic thinker when faced with everyday challenges and uncertainties. As your confidence grows and your account balance begins to swell, you will naturally want to look beyond just buying fractional pieces of single, famous companies. This is where you encounter the concept of an ETF, or exchange-traded fund. Think of an ETF as a pre-packaged basket that holds tiny pieces of hundreds or even thousands of different companies all at once. By directing your small investments into an ETF, you achieve instant, effortless diversification. Instead of betting your hard-earned $20 on whether one specific tech company will succeed, you are spreading that risk across the entire stock market. If one company in the basket has a terrible year, it barely makes a dent in your overall portfolio because the hundreds of other successful companies balance it out. There is a profound sense of empowerment that comes with owning a broad market ETF. You are no longer just a consumer buying products from giant corporations. You are a partial owner of the entire economic engine. Every time you see a delivery truck, use a streaming service, or buy groceries, you know that a tiny fraction of those global profits is quietly flowing back into your own pocket. To supercharge this wealth-building process even further, you need to make sure you are keeping as much of your money away from taxes as legally possible. This brings us to the incredible tool known as a Roth IRA, which is a specific type of individual retirement account designed for your long-term future. Opening one of these accounts is just as easy as downloading a micro-investing app, but the benefits are absolutely staggering. The magic of a Roth IRA lies in its unique tax structure. You put money in that you have already paid taxes on, like the cash from your current paycheck, and then you use it to buy those ETFs or fractional shares. Because you paid taxes up front, every single dollar of growth, every dividend, and every compounded return over the next several decades becomes entirely tax-free when you finally withdraw it. It is incredibly common for Gen Z to dismiss retirement accounts, thinking that being 65 is a lifetime away and irrelevant to their current struggles. The word retirement sounds like an old person's concept, entirely disconnected from the vibrant, fast-paced life you are trying to build right now. But viewing a Roth IRA merely as an old age fund is a massive misunderstanding of its true power. What you are actually funding is your ultimate freedom and independence. You are building a massive reservoir of wealth that ensures you will never be trapped in a toxic job, forced to rely on others, or left vulnerable to economic crashes later in life. You are literally buying your future self the luxury of time, choices, and absolute security, which is the most valuable thing money can ever purchase. Every time you automate a $5 transfer, buy a fractional share, or fund your Roth IRA, you are taking a definitive stand for your own worth. You are rejecting the narrative that your generation is destined to be broke, forever locked out of home ownership and prosperity. You are stepping into the role of the architect of your own life, carefully laying down bricks today that will form a massive fortress tomorrow. The beauty of this entire system is that once it is set up, it requires almost zero daily effort on your part. You automate your transfers, you automate your investments into diversified ETFs, and then you simply walk away and let time do the heavy lifting. You do not need to become a financial obsessive reading stock charts at midnight. You just need to be consistently, quietly disciplined in the background of your life. As the months turn into years, the financial anxiety that used to define your days will slowly dissolve, replaced by a quiet, unshakable confidence. You will know that no matter what happens in the broader economy, you have a growing, compounding machine working tirelessly on your behalf 24 hours a day. That peace of mind is transformative, allowing you to take bigger risks in your career, travel more, and live fully, knowing your foundation is secure. The journey from financial scarcity to sustainable wealth does not begin with a lottery win or an inheritance. It begins with the courage to invest your very first dollar. It is about trusting the process, making investing accessible to yourself, and allowing the unstoppable force of time to work its magic on your behalf. You have everything you need right now, in your pocket, to completely rewrite your financial destiny. Remember that while these strategies are powerful, personal finance is deeply individualized, and investing always carries inherent risks. The market fluctuates, and past performance does not guarantee future results, so it is crucial to stay educated and make informed decisions. Always consider consulting with a qualified financial professional to tailor these concepts to your specific situation, ensuring your unique path to wealth is as secure and effective as possible.